Welcome back to my channel, guys. Today we're going to review the Geeq protocol. This is an infrastructure protocol, an interoperability protocol, and I think it has a unique approach to that, making it a perfectly valid part of anyone's portfolio for a well-diversified portfolio. And so it could definitely take a big market share of the foundational layer of blockchain. Okay, so this is a top-down view of this project. There are some things I do not like, such as, but we'll get into that further. And, there are things that I really do like. And it takes a very unique approach to, to the interoperability to the foundational layer of the new web. That will be blockchain. That's why I think that this is a necessary part of a portfolio. Obviously, nothing here is financial advice, but I'm very, very bullish on this project. I even say, I think that it will probably see price movement in the short term, and then you'll see more price movement around the beyond the 24-month period. And we'll get further into the details in the weeds on that. Okay, so what problem market will this project solve in the future? And is it valuable, right? So let's get to where I could start marking things off here. I'm going to start crossing things out. So what problem does this thing solve in the future? Well, it's a foundational layer. It's a architecture. It's the it's an infrastructure play. It is a multi-chain architecture that creates new instances with new rules, but without its own token. It allows for a unique approach to code as law architecture, where users can stay on the instance of their choosing. In governance chains, majority rules. In Geeq, even if you disagree with the majority who move to a new instance, you can exist on an original instance with original rules. What does this mean? What is this instance thing that we're talking about, right? An instance, think of the blockchain as going like this. Well, an instance will be another blockchain, and they can intercommunicate, right? But they won't create new rules. And this will have its own throughput, like 1,000 transactions a second. This will have 1,000 transactions a second. And so this is the way this thing could scale, right? It could keep spanning it and then have these parallel instances, right? Running blockchains. And it could keep doing this, right? So, and they could all intercommunicate. And, each one will have different rules, and users will decide which one they want to be on, or which one they want to launch their apps on, or have their tokens have certain abilities. Their tokens might have unique abilities here, but it's not really like forking. Whereas forks are involved, like the nodes choose the fork. This one, the users will choose to fork. And it's not a fork, it's a instance, right? They call it an instance. It's like a computing environment. And each one of these computing environments has its own rules, its own information, and it can communicate with each other, and so it can scale that way. So it's a completely unique approach to the whole thing, but it is a very valuable project to have in someone's portfolio because of this approach that is unorthodox. So it has a proof of honesty as its derived consensus model. It uses something called CDM, the catastrophic dissent mechanism, which is game theory using a system of audits which prove honesty. This catastrophic dissent mechanism proves honesty of nodes, and those nodes that are honest get higher payouts. So there's a huge incentive to be an honest node, an honest actor. And you have some rule sets that prove that you're honest, and so no one wants to be a dishonest actor. Geeq is a federated, interoperable blockchain. So it's going for the same market share that Polkadot is, and we've all seen what Polkadot can do. And Polkadot is going to be a monster because it's going for an infrastructure play. And infrastructure plays right now in cryptocurrency history, infrastructure plays are the biggest wins because the infrastructure is yet to really be laid out or to really win out on that. Many people think Ethereum will win it. I am not in that. I don't think Ethereum has won. And one of the reasons for that is just take a look at Ethereum's fees. They're outrageous. That means we will move to a system that is not outrageously expensive and has governance of some kind. Whereas this one doesn't have a governance. A single instance, it could be 1,000 transactions. They proved that recently. Before it said it was 40 to 200, but now they've proved that it could be 1,000. So it could scale very quickly. AMP is an algorithmic monetary policy. its monetary issuance is guided by an algorithmic monetary policy. The price is controlled by a demand rather than speculation. So regarding what we as investors like to see, we want to see the price go up. According to John Conley, uncertainty is introduced in risk-based layer. AMP is predictable. Okay, so what he's saying is, like, if you have all these huge fluctuations, like John Conley, right, one of the developers, he said, if you have all these fluctuations, it makes a lot of uncertainties within the protocol. So what happens with this protocol, Geeq? The price rises, leading to token-based expansion, which leads to fiat cash reserves for price support. So when the price goes crazy, they make a lot of tokens. The protocol will make some tokens, and then it'll sell back down, and then it will buy back the token and burn it. So it'll make tokens up here, and it'll buy back and burn here to stabilize the price. And the price will move steadily up with adoption, with users. And, and they'll have a base layer that'll show price support to this. And all of this is going to be run by algorithms. So it'll be a predetermined, publicly known additional supply in bull markets and an additional demand in bear markets. So reserve buys tokens and restores them into circulation. So it removes them from circulation. So if you guys are aware, this might be similar to Ampleforth. Ampleforth has saw massive profits for people who bought Ampleforth, but they didn't see it in price because the token was $1. What they saw it was in market cap gain. And for this protocol, people who use this protocol will see the price go up if it gets adoption. But the way it's similar to Ampleforth is like Ampleforth, the expand, increasing and contracting to control how that price fluctuation works. Instead, the protocol itself gets more or less tokens, but the tokens are removed, or the tokens are added or bought, and supplied or sold. So the protocol itself is what's doing this, right? The protocol itself gets more or less tokens, but the tokens are removed or bought and supplied or sold. What is really happening is the protocol is the one enacting this, right? It's the one who's buying the tokens off the market, and it's the one selling the tokens on the market, and it's adding reserves. The protocol itself is what's kind of attempting to stabilize the price, okay? And whereas Ampleforth, it just adds new tokens to people's wallets and removes tokens from people's wallets. This one, the protocol adds tokens to its wallet, and it removes tokens from its wallet. But it does it through the market mechanism. Through buying and selling, rather than just letting users do that buying and selling on their own. Geeq is used to pay the validation network and allow validators to stake for the good behavior bonds. So it's a use for staking to create nodes. So the Geeq token is used for a core component of the protocol. So another thing that's good about them stabilizing the price, the price could be stabilized instead of going like this, like most cryptos, like this. What'll happen is it'll just, like if it's getting more adoption, it'll be more steady. It'll close this bandwidth, right? So traders might not like it as much, but hodlers will. And you guys know I'm a hodler. Okay, so financial instruments can be built more secure on a token that's not subject to massive price swings. Think about collateral ratios, etc., more stable derivatives. This protocol could have more sophisticated price instruments, and those price instruments, like collateralized price instruments, like all the different things you see, like securities, mirror protocol, etc., like synthetic assets, all of those things will be more stable on a protocol like this one than they will with ones with massive price swings. So that brings an extra layer of security that doesn't exist in other protocols. That's why I'm saying this one's unique. This is a very unique project in its structure. It's scalable, inexpensive, and computationally light. Its ecosystem is flexible, interoperable, and extremely secure blockchain where users decide truth rather than the nodes. So the users flock to that instance. Remember my instance thing where I was talking about these instances, and they can come together like the users choose which instance, which rule sets they want to adhere to. So instances are independent and sustainable with no mother chain to check in on. They check in with each other, they can talk to each other, but they're not checking in like with a relay chain like Polkadot. So basically what an instance is a computer context, a runtime environment with blockchain logic with its own validators. It's a single complete Geeq chain with its own Genesis block. Once again, in different wordage, instances can be thought of as their own chains. Geeq chains recognize each other and intercommunicate. They have whatever rules they want, and users vote with their feet. They use instances of their choosing. One of the great things about that strategy means that there won't be a governance system. Now, there will be a governance disguise, like I'll get into more details with governance, but for the most part, a very amazing part of this idea is that you won't need governance, but the system can still upgrade. So if you're on an instance that's not upgraded, right? This one's like going for some time and it hasn't upgraded, then it'll split off again and more end users will use these rule sets that are upgraded version. So they don't need governance. They can just go with their feet which instance they want to use. So it avoids the problem of the commons, which is a governance issue. So that is a very unique component of this. It seems to have reduced a significant amount of the risk associated with governance. So proof of honesty. Is their consensus mechanism. So what is that? They basically wrap their nodes into rules that prove its validation as representative of truth. So honest nodes get everything, dishonest nodes receive nothing. Okay, so honest nodes get paid, dishonest nodes don't get anything with this proof of honesty model. Nodes will only communicate with other honest nodes. Basically, what the proof of honesty is, it's basically a node wrapped in some rule set. And that rule set is what proves that it is honest, right? So it's some proofs that prove that something is validated. And the team is an all-star team, so can they deliver? Absolutely. All right, so let's get into it. Like I said, this is a very interesting project, so it's got a lot of details. All right, so price performance, I do expect it to perform. Future increase in demand for token, I expect that to be the case. The team Twitter is the project Twitter, my bad, it's 14,000 followers. The team Twitter is like practically invisible. The Telegram is smaller. You know, but for a project like this, an infrastructure project, this is all green. Like the social media awareness, this is pretty much like no one's aware of it. It's an unaware project. Before the marketing campaign, it's under the radar. It's under the radar, especially for an infrastructure project. So in 2021, the mainnet will launch sometime this year, and commercial and consumer adoption will be spread after that. You know, and so that's on the roadmap. Basically, mainnet launches this year. That's going to be big. And they're going to have a lot of consumer and commercial applications. And I expect future excitement from price momentum to happen in the future. Money needed to move price up decreases. I expect that to be the case. Okay, so as far as core elements here, like what is the token used for? The token is used for locking up in the nodes these instances, right? For validating these instances. It's locked in smart contracts for, you know, collateralized instruments, whatever. It could be used for all of that. It's bonded for this good behavior, which is more of the node staking kind of thing. You know, just like mentioned above, locked in for nodes, right? It's bonded to those nodes for good behavior proofs. Modest amounts for node stakes. Yeah, so it's got a small amount for the node stakes. Basically, it's just kind of like proof of stake, but it is smaller amounts. Regarding it, so it's used for consensus. The token is absolutely used for consensus. If you're a dishonest node, you don't get paid out, and you could even be punished your stake in those stakes. Catastrophic descent mechanism, that's part of that proofs, your punishment for not behaving properly. More transactions, higher value. This token should go up in value based on the transactions, the number of users, and that is their objective, to make this thing used. And so that's where the price action will come from. And, you know, and it pays for validation. It pays for validation of the network. So that's what the token is used for. As far as the target market, it's that infrastructure play, that 400 trillion market. So it's that big market. And I don't think you're going to be, like, a lot of these blockchains are going to be rubbing shoulders anytime soon, because they got to on-ramp this $4 trillion in instruments in the world. The world is coming to blockchain. And so there's going to be plenty of successors. And this one is a unique design. And it will be interoperable, so it can plug in the Polkadot, or it can plug in all these blockchains and be that interoperability play. So it has a reduced risk element because it is that infrastructure type project. Fees that burn projects, you know, tokens are not burned. There is no dividend. Regarding price performance, it has 3x since January, and I noticed that it is starting to move. That's why I wanted to get this video out soon, like as soon as I really discovered this. There is no niche because mainnet is not live yet. As far as the market cap is concerned, so I'll get into the market cap stuff. This is some of the stuff I don't like, but regarding the market cap, very, very, very low market cap for this project. But because it has a really hyperinflationary situation, this is one of the things I don't like, it's going to have, its supply distribution is pretty terrible. Its inflation is going to be pretty awful. Its instance will likely create high inflation. So let's take a look at that, right? So basically, you're going to have 400% inflation over 18 months. That's 266% a year, 20% a month. And we're right here. Now, I did buy because it is an incredibly small market cap, and I'll tell you why I bought, even though it's going to have this massive amount of inflation. But you're going to have a big amount of release from staking pretty soon as well. So that's going to be a huge amount of downward pressure, right? And it's big token release in 2 months, because I was looking at their staking release dates, and that's when a lot of tokens will be freed up. So there's going to be a huge amount of new supply coming on in 2 months. So these are terrible things. And this is when their protocol activation goes into play, like about 5 months from now. Their protocol will start having that AM, algorithmically managed token issuance, protocol will be activated. So you'll start getting the benefits of price support sometime in a few months. So it's going to switch that new monetary policy. Price support, price suppression, price support elements. But reason I did buy, even though it has terrible inflation, is because now what I do, when something has terrible inflation, instead of considering the circulating supply, all you do is simply consider the diluted supply. And the diluted supply is 150 million. That's still extremely small. So this thing could reach 15 million. That is 100x. So if this thing is a 15 billion market cap, that would be 100x from here. And, I think 15 billion, the founder of this project has made billion-dollar entities before. So it is entirely, even if it was to reach 1.5 billion, that's still a 10x. That's still a really good return. So that's the reason I invested, because it's one of those projects that has a pretty good likelihood of 10 to 100xing. But the thing with this project, if you are going to buy this project and sometime in the future and you're using this to review it, use this value, diluted value, at least for the next year, because there's high amount of issuance. You look at the distributed instead, and that way you don't have to worry about distributed, because you're saying, oh, is this a reasonable value for its distributed? And if not, then you might want to consider the risks associated with that huge amount of token release. But that's the most negative thing about this whole project. Now the rest will look pretty good. So the tokens on the sell side do decrease. I expect that to be the case. All right, so we'll get into the team. So Rick, he's the CEO, and he's managed TerraPack Corporation with 11 to 50 employees, Internet of Things, microelectronics, etc. Extremely small electronics. So this company that he was in, it did microelectronics. And I saw him doing a presentation on it, and it was talking about stuff that's smaller than a micromillimeter, etc. So he's used to that kind of manufacturing. He created Open Text Corporation, which later on became a $5 billion in revenues company. So he's really good with starting these billion-dollar entities. He's a very forward-thinking person. He likes to think about the future. He likes to be right on that cutting edge and to create those businesses. And guess what? He's creating Geeq. So he is very accomplished. A company that has made $1 billion in revenues, it accounts for my impressive achievements. Evidence of ability to solve difficult problems. Yes, the team has that ability. John P. Connolly, game theorist, mathematician, mechanization design, and computer science. This is the guy who partially came up with the Geeq's architecture. Okay, and the team. There's I suggest you guys take a look at the team. It's a very talented team. Stephanie, has machine learning. So yeah, they're a very impressive team. There's 25 of them. They have a big, large team, all of professional type people. And I will note that the founder is older. In crypto, typically people are younger. The founder is older, and I actually think that it's a good thing, because he comes with that life experience. If I'm looking for something that someone who's like this, who's created these innovation companies before, they have an insight that some of the other projects won't have. So once again, a very unique project in many, many ways. The CEO score I put at 8.4. This is a subjective thing. And, for visionary and experience. Team has majority control through majority token control. Well, as I showed earlier, you can have control of your instance, which means you can be involved in the reality that you want to have. So it's an evolutionary type thing. So regarding governance, no need for governance. Choose instance that you like. Instances can arise with laws they adhere to. Open like the web, right? Users vote with their feet. Quick niche filling, right? So the thing with these instances is there could be instances launched that fill specific niche requirements, and that means that they're going to fill certain market components very rapidly. So this is an evolving blockchain conglomerate, an evolving cluster of instances. So it's an evolution-based governance. Like I said, very unique, very interesting. This model is kind of brilliant. Users choose the context on which they operate. This way, users agree to the context of their choosing. In forks, validators choose which model they want. Users choose in this model, but no new tokens are created. So there's no like forking, like making all these new tokens that are splitting the community. It can all be the same community, but the new people on the new instance can have their cake and eat it too, using this model. And you don't have to deal with the tragedy of the commons, like whatever the mob rule goes, you can still exist on your specific niche. Some of the risks that exist, it's likely that future funding will change. Risk that core team always controls future funding. So one of the risks is that the team, this is another element that I don't like, the team controls funding of the project right now, that algorithmic policy that sets aside funds for developers, the team controls it now. Now in the beginning stages, that's excellent. That's exactly what you want. You want the team to be in control of funds. But in the future, that's where the uncertainty is, because that should be handed off to the token holders. The token holders should be able to vote on what the funds will do in the future. So it's kind of like the token represents ownership of the conglomerate of these instances that move an instance cluster, operating like a flock of blockchains together. Okay, so high value people prioritize upgrades. Developer compensation, yes, because they decided by the core team right now, and 10% of token revenue from the AMP, so algorithmic monetary policy. So the developers will be funded into the future. Long-term vision and strategy. Basically, their vision is to take blockchain to the next level. Now, I didn't notice anything about them saying what their specific why statement, their mission statement, etc., like that. But they just want to take the blockchain to the next level. So there is a risk with focus with that. But that is a light element. But I have noticed that in the most successful projects, it is good, this is another risk area, is that it is good for them to have a clear mission statement of what impact they want to do. But they did say that they want to take blockchain to the next level. So it kind of fits that narrative. Regarding the team, they're a very large team, so likely all of these areas will be covered. But I did notice regarding the team, the core team members, like the CEO and etc., they're wealthy, they're understanding, they share valuable information, and they're consistent. They have some of those characteristics of trust. But since it's such a large team, it's like a group of people, right? They're already successful at other innovative endeavors, successful business people, and so that means they're like more trustworthy. Value of, I expect high value upgrades, value of services provided to increase. I expect that all to be the case. Okay, so strategic partnerships and backers. They have finance partners, Fiat, ICO, and Oracle. But basically, the chain link is going to be their connection to market data, retail data, event data, and bank data. They have integrated with TrustSwap for ICOs and things like that. Plasma Play is their fiat on and off ramps, and Staff on Finance was their liquidity allocation, and that's just a broad scope of their partnership. Obviously, those partnerships are not exactly those things, but they'll have different services. Best option of the competition. So unique approach, right? Most other projects rely on proof of stake or governance. This platform allows for governance in the form of evolution. If you don't like the current rule sets or technology, you can create a new instance and users choose the instance on which they want to exist on. So it is a very unique approach, and that is the number one element of this blockchain. Is I would say that it's unique in its approach from all the others. Okay, external transfer catalyst. So this is not an issue. If someone builds your project on this, they're going to stay. Foundational layer protocols have a degree of stickiness that can endure. Changing your business to a new foundation is very difficult. So once you build your business on something like this, you're not going to just flock, because it's like changing your whole foundational layer. Regarding marketing, they got this guy, German Ramirez. He was the first to bring a cryptocurrency ATM to Switzerland. And now that ATM is in their museums, but he's their marketing guy, and they have market plans. Now, regarding pooling people from other networks, that may be an issue for competition. They're going to have some stiff competition bringing other people in from things like Polkadot, etc. But like I said, they're not rubbing shoulders with anyone. The biggest thing that they're going to have is trying to find talented developers, because guys, if you really want to make it, the best investment, if this was investment advice, my investment advice would be learn to code or to learn to work in blockchain. This is why you want your career set to be in blockchain, because this project, This project's going to have a difficulty hiring people because there's so much demand for developers. That's going to be the problem that all these things have. So they're going to have, we got $400 trillion in assets coming into the blockchain space, and we're going to have very few developers that can handle it. So the space is going to get overloaded. More people using the project, right? So yes, I expect that to be the case. Project will have a lot of buy and sell activity. I expect that to be the case. It's on DEXs right now. You can pick it up at Uniswap. You can pick this thing up at Uniswap right now. But in the future, when they go live, that will not be the case. And so I put that as yellow. Project is easy to use. They make it for the developer environments. Tokens per person to go down. I expect that to be the case because there's going to be more people using it. Now, this is not on many exchanges. Token is hard to acquire. It is kind of hard to acquire. It's on Ethereum, which is super expensive. It's only on like Hotbit, I think, and that's it. You can check it up on CoinGecko and check into that for where it is available. Large business models that demand token to reflect their needs. I do expect large businesses to buy the token in the future to run some of those nodes, etc. Okay, guys, so I think I covered everything. The final pros and cons. No governance model. So the pros, no governance model, it's very unique and it reduces risk that comes with governance. Human beings are very complicated. So not having governance is very important. So this is very good. But they do have the core team deciding, the funds. That's one of the cons, and we'll get into that. Instances that allow for massive niche expansion and scaling. So it could scale and it could acquire many niches using these instances that will be operating in parallel, like working together, right? So yeah, it's going to scale and it's going to acquire many markets. So that is a very powerful element, is using this instance model. Very small market cap. Guys, it is a very small market cap. It's 14 million circulating, but 150 million diluted. So it's still very small. Consider the diluted. When you look at this one, don't look at the number that you see with circulating. Look at the diluted because it has super high inflation. 150 million, that is extremely low for something like this project. And it is a competitor to Polkadot. It's a competitor to Cosmos. It's one of those infrastructure plays. Cons. It is the distribution will lead to massive inflation over the next year. So it has like a very high inflation rate. That is a very massive con. We might not see price performance. We might actually see price performance. But the fact is, it's a very small market cap, and that's why I bought it anyways. Team has control of treasury, and transition to decentralized control of treasury is uncertain. So uncertain future regarding how the treasury will operate in the future. So that's one of the risks as well. So like I said, I expect it to be one of the best performers in the crypto space because it's got that super small market cap, at least in the short run. And then I think it'll have better performance in the 24-month period because that's when we're going to be reaching this 50% issuance, and that's where the issuance stops having such a horrible impact on it. And then it could, it will be running by this AMP protocol, and its price will be stabilized. It actually might even be a great project after this period to buy during something like a bear market, or if it has a big pump in the next cycle. This project might be an excellent project for preparing for a bear market because it's going to have price stability, price support. So guys, very unique project, very interesting project. I like it very much. I did add a big chunk to it. It's one of my smaller positions. Once again, it is high risk protocol. But I did add it's one of my bigger small picks, you know what I mean? And I like this protocol a lot. Excellent find, excellent all around. And if you guys like this kind of content, please subscribe to my Patreon. They will see this first. My Patreons will get to enter this first. They'll get to see this data first. If you want to be part of that exclusive group, just join my Patreon, like and subscribe if you like this content, and then I'll talk to you guys later.